Good morning. Hope you guys doing well, and welcome to today's edition of London Session Open here on the ATFX YouTube channel, but also on investingcube.com. We're going to take a look at the markets, talk a bit of what's happening, and try to help you, support you guys in your trading. I'm also, of course, gonna sort of share a bit what I'm doing, and that's sort of part of the process. Okay, so we're going to take a look at the euro dollar, GBP, and dollar yen. We're gonna also take a look at the German DAX, S&P 500, gold, and crude oil. And we have about 10 minutes or so to do all of this, and we're going to begin then. But we're going to begin by taking a look at the situation with COVID-19. So my idea over the last few weeks has been to just be bullish and look for some sort of a reversal when we start to see the data improving, and when we as well when we have sort of the worst increase in cases. That's when we tend to see the low, and so far that has worked out relatively good. The German DAX, this is an index, by the way, covering Spain, Italy, and France, Germany, UK, and the US, and I did an equal average for all of these. And what you can see here on my screen is you can effectively see how that trend is going. See if it loads. There we go. And when the German DAX bottomed out, the growth rate in this index was at 35%. In Germany specifically was at 71%. And on March 22nd or so, a few days later, the US stock markets bottomed out. And on this day, the increase of new infections in the US was about 51%. So that was sort of the worst and the serious for that period. But now, because of all these lockdowns, pretty much that's what happened in China. The infection growth rate has dropped sharply. So across all these different countries now in this index, the growth rate has dropped to 5%. If we look at the individual outcome from these countries, some of them are doing some very good results. So let me show you the number for Italy. So the number for Italy yesterday was just a 2.8% growth rate, which is really low, especially given that they were around 25, an average actually of 24 just before the lockdown on March 9. If you look at countries like France, they had a really good solid number yesterday, and people said, well, it's a bit suspicious or so on and so on. But look at this. Yesterday they had a growth rate of 6. So the average for the last 3 days is 6%, which is a solid number. Just a week or so ago, they were much higher levels. Look now at the UK. UK has struggled quite a bit to get their number lower, but you can clearly see here how the let me just do something. How the numbers have now dropped to 8%. And as well, Prime Minister Boris Johnson was taken to the intensive care yesterday and provided oxygen. And it's quite likely, I think, that we're going to see that have an even bigger effect on the UK population, where they are now going to see, oh, look, our Prime Minister is in hospital. We should probably not go out sunbathing. We should probably respect the rules. And I think relatively soon, if there's some improvement here, so they might relax. Otherwise, I think they would have been giving the police even more authority to combat people that are, breaking the rules, really. US as well. So US has a very sharp, nice decline. Lately, they just had a growth rate of just 9%, which is really good. If you think about it, the US started around 32 to 51% growth rate when they locked down, and they locked down just a few days before the UK, which had a growth rate on average of 21. The US had over the same period a growth average of 38, but they're pretty much neck to neck here. And as I said before, I think the reason for this is that in the US, you don't have access to the healthcare system for free as we have here in the Western world. Of course, we do pay much higher taxes, so everybody pays somehow, but as an individual, it's not like necessarily a big deal, and money-wise. And what happens is that I think people in the Western world are a bit more relaxed, because they're like, all right, if something happens, I'll just go to hospital, they'll take care of me. I think it's not really the same in the US, and I think that's maybe why you're seeing such a good improvement in the numbers here. Spain as well, they've been struggling, and now they're just down to 4% growth rate. Germany as well doing a really good job. We saw a significant slide here to just a 3.2% growth yesterday. So things are looking good. Now I didn't update the individual charts here. I just updated the big index, which shows you a drop rate to 5%. So why does this matter then? Because we had a huge increase of cases, right? And then the government said, all right, we need to deal with this. Everybody just stay home. And everybody, well, mostly everybody did stay home. And that's why you had that really bad non-farm payrolls and those terrible initial jobless claims. And probably the reading for this Thursday from the US is going to continue to be bad. But that's all artificial. It's the government telling people to stay home. But because things are improving, you have countries like Denmark and Austria looking to open up again. So let me see here what the Austrians said. I think already from next week, let's see, I saved it on my computer here. Oh, my small. From next week, smaller shops, do-it-yourself shops, so you can buy building material and stuff like that, and gardening centers can open on Tuesday, on April 14th. Bigger shopping malls and hairdressers will be able to open from 1st of May, while restaurants and hotels will need to wait until mid of May to open up. And no bigger concerts and events are going to be able to go through until the end of June latest. And as well, children are going to be at home until mid of May. So we're already seeing now changes to and people coming back online, and we're probably going to see more and more of this, and maybe countries like Italy over the next week or two, and maybe even Spain or so when things calm down a bit more, because in some of these countries they still have some very high death rates, and some of them on infection basis is still quite high. But what is quite interesting here is that again, the death rate is just a derivative of the infections, and it's the new cases that are important. I think the case of China, they waited I think until they had almost zero or no new cases. So that's why, and that's when they started to open up again. Where are China here anyway? I can't find them anymore. Here we go. It's got 39 cases, so it's not a big number. All right, so let's talk about the markets and the levels then. So if you want to be buying the DAX, I think it's a bit too late to buy it now. This is a good opportunity to book profits if you really want, if you kept on the positions. So we said a few days ago, buy here. That worked out really good. Already yesterday, I said this is a good spot to book 75, if not 100%. But if you did keep it, we went up higher, and I think this is a really good opportunity to book profits on that one. I think we can easily pull back a bit, but and if we do go back to 10,142, I think people are going to be buying here again, and I'm just going to remain bullish above 9711. This is the S&P 500, where we said look to buy down here a few days ago. Then we tightened the stop loss. Here again, we're pretty much close to the breakout level, and I said yesterday that's probably a good spot to book profits. And I still stick, and I still think that was a good idea. Of course, if you did keep the position, then this is also a very good spot to book profits. And I think if we do go back to 2,642, I think people are going to buy again. The biggest challenge with these markets right now is, I think what will happen is that we obviously had high volatility here, and I think now we might start to go back to low volatility growth. So let me show you. In 2019, you had sharp declines, and then you had this move to the upside here. And here, when we took out this level, after such a bullish day, I would have told you, look to buy a pullback. Now, I don't remember what I said that day on January 4th. In fact, January 4th, I was not even sure if I was working that day. But I would probably say look to buy in a pullback, but we just went from strength to strength to strength. So the volatility changed. And I think that's probably and hopefully going to happen relatively soon, which means that we just go slow and slow. But right now we're here, we have a massive pull gain, and we need to be a bit of a pullback. And sometimes we'll get it, sometimes though it doesn't pull back and just gets sticky, and then it just goes up and up. And if that happens, it's going to be a bit difficult for me to give you a very good entry level, and effectively means we're going to miss entry levels over the next 2 days or so. So that could be the case here. But for now, let's see if we can go back a little bit, and then we'll try to be bullish again. Gold prices. So gold prices are a bit difficult for me, I think, because sorry, this is your daily chart, because we're so close to this high, and people sold here in March and here in February, and I think they're gonna sell again. And I think for now, at least, I'm gonna be bullish above 1604, which is this level here. And if we do go down to something like 16.32, which is a 61.8% correction level, I think people are gonna be buying again. Crude oil prices. So we got a really nice entry yesterday. We said look to get involved at 2601. That looks okay for now. We're up with 53 cents on the barrel. I think if we do go down again, I think people will buy, and I think we're gonna attack the high, and then we'll just see what happens. It's a bit of an issue here always, because you had a very strong downtrend, you had a very strong correction, and in worst case, it's just something like this, and then it tumbles. And that's what worries me a bit. But I think we have probably bottomed out here, and I think it's gonna maybe be a bit messy between 19 and 29.20, but we're looking to bottom out, and it's trying to carve out a low. That's what I think, at least. All right, so this is your euro. So the euro now took out this level here, forces me to turn bullish. And I think if we do revisit, and if we do go a little bit lower, maybe to something like 108.20, I think some people are going to be buying and then going to attack the upside. But it's super difficult. If you look, this is your daily chart. You don't have a proper trend here. You have obviously the long-term bearish trend, but it declines a lot, gains a lot, declines a lot, gains a lot. This is a bit annoying. This is a bullish breakout, and this is a bearish breakout, but neither of them really worked out. So I think you need to be very careful here, and if anything, I would just ignore the euro dollar. GBP versus USD is much more straightforward. Yesterday we said look to buy at 122.31. We're now at 123.27, so about 90 pip gain. And I reduced the trend defining level to 121.16, and I think we can go a little bit higher, maybe to 24.20, 24.80, but that's probably a good little spot to book a bit of profit, and then we'll see what happens. This is the trend defining level here, and I think if we take this out, we can probably go lower. So this, I wouldn't mind being bearish here on a break to 121.16. As well, there's more risk for the pound right now, given that Prime Minister Boris Johnson is in intensive care. If things would go really, really bad for him, and I really hope it doesn't, but if it would do that, I think that's going to push up volatility in the pound, and we could potentially see a break to the downside here if that would happen. Dollar yen, very much a similar situation to what we've seen in the Euro USD, with very strong moves to the upside, very strong moves to the downside, and up again. So again, I wouldn't really have a very strong view here. Okay, fortunately it's 10 a.m. so unfortunately I need to leave you, but I'm just gonna see who's watching right now. Say good morning to you guys, and so we have Vincenzo saying good morning, and we have Basa the second as well saying good morning, and Stefan as well. So Stefan says the short of the century here. I think I disagree with this. I disagree strongly. You just need to look back and sort of do a bit of, I'm not saying you're not doing it, but look at what happened in 2003. Look at what happened in the beginning here in China. We're following the same pattern, so it's no secret. And it's really important to look wide. Like, I'm looking at your name, and I guess maybe you're in France. Maybe. It's important not to have, a lot of investors will have what's called home bias. They look at what's happening in their neighborhood, and then they use that to make decisions. It's really not really good. I think if you ask anyone that lives in the Euro area, they say, oh, things are a little bit difficult, and it has been difficult for a long time. So they use that lens the same way as I use glasses. They use those glasses and they look at the world like that, but it doesn't work like that. If you go to other parts of the world, it's not always like that. So I definitely think that there's a situation where some hotels, some bars, some gyms, some places that did not make a lot of money before, and they don't have money to overcome this. I think these people will probably go bankrupt, and I think definitely we're going to lose some of the value we have. But if you look at what happened in China, they say they were 100% just in the beginning of January. They lost quite significantly, but they're now back up at 60% of where they were. And that tells me that the same could happen here with stock markets. So for example, in the S&P 500, we're now corrected 38.2%. And if we just go back to normality, which I think we will do, we'll probably go up to 61.8% in the stock market. So the economy bounces back up to 60. The other thing as well is that they pumping so much money into the system here, and that is surely going to end up in someone's pockets. And usually it tends to end up in stock markets going higher. So that's my view on that. We'll see what happens. If not, we always have like the stop loss orders. Like last time we said, look to buy here, stops here, and so far it's looking good. You know, we had a very nice profit here, and I'm gonna be moving up the trend defining level. And at one point, of course, this is gonna turn around, and at that point, hopefully, we're gonna be bearish. Remember, I had my trend defining level up here somewhere when things turned bearish here, so it wasn't that I was bullish all the way down. We were bullish from here, and then we were forced to turn bearish, and I think we were bullish here, but then we were forced to turn bearish, and then for most of the time we were actually bearish on the downside. So let the charts guide you and the macroeconomics. All right, let's see what happens. Guys, I want to thank you so much for watching. If you do have any questions for me, you can always reach out to me via AlexFX00. Thank you so much, and see you guys soon. Bye-bye.